break down those movements now, Wayne McCurrie from FNB Wealth and Investments is standing by. Very good afternoon to you, Wayne, excuse me. I just have a little bit of faith in the local market today, I suppose. Let's start with at 1/3% in the green to start off the week. I did say one of the big positive contributors were the industrials that came through for the local bourse. What would you say were some of the big movers that contributed to the movements we saw today?
A little bit down and it ended a little bit up. And the big movement, the big movement was actually AB InBev that bought the SA breweries a while back. They really propelled the industrial index upwards. And as you said, the other indices were all flat essentially on the day.
Yeah, no, that's absolutely right. What's been impressive, Wayne, is the rand, that remaining quite resilient over the last few days against the US dollar. What do you anticipate in the short to medium term? Because it is, or it has been rather, very volatile for the last few months.
Medium term, we're going to actually see some rand strength. I think the rand could easily go back below 16, maybe even to 15.50. But that's more of a medium-term, one-year view. Shorter term, who knows? But I think there is a period of dollar strength has probably come to an end. And certainly when interest rates start being cut in a year's time, normally that benefits currencies like the rand, commodity-related currencies. But I mean, it is good news. We've gotten stronger rand. And of course, even though it might not happen next week, the oil price at $81 a barrel is, and the firmer rand is actually quite good for lower oil prices maybe the next month.
Yeah, and I mean, does that bode well then essentially or ultimately for the inflation outlook and perhaps the trajectory that our own Reserve Bank has been taken over the last few quarters?
Do what global reserve banks do. Simply because if they don't, the rand will weaken quite significantly. So I think we've seen the last of the 0.75% increase. The next one will be 0.5%, and maybe only one more after that. Because inflation has peaked, it's starting to fall, but it only really starts to fall heavily. So somewhere between April, May, June, inflation is going to start falling heavily. And I think by the end of the year, it will be back in the target range, and that we'll start to see both here and overseas interest rates being cut at the end of next year, beginning of 2024. So one more year of higher interest rates, unfortunately, but at least there is some good news on the horizon in that respect.
Good news coming in from Standard Bank as well today, Wayne, their trading update showing some really solid growth, and they've benefited from the higher inflation and interest rates. So what did you make of that trading update that they shared today?
Look, they didn't actually give much details about actual earning. The same as with everyone else, both here and overseas, costs are going up strongly because of the higher inflation. But the other two aspects, I think, were quite positive. Banks in the shorter term benefit from higher interest rates. And of course, we know interest rates are going up quicker than what costs are going up. So they do get a margin enhancement. And also their bad debts seem reasonably well under control. So I think a good trading update, but the market was expecting it. I mean, all the banks are going to issue more or less the same type of trading update. And it is good news, but the market well anticipated it.
Yeah, no, absolutely. Wayne, as always, thank you very much for your time this afternoon. That is Wayne McCurrie from FNB Wealth and Investments. And that's all your